North Carolina housing inventory just jumped 25.7% in 1 year. That's not a trend, that's a seismic shift. And if you're thinking about buying or selling in this state right now, you're walking into a market that looks nothing like it did 6 months ago. Here's what's happening on the ground. Buyers who've been getting crushed in bidding wars for 3 years are suddenly seeing multiple price drops on the same listing. Sellers who thought they could name their price are watching their homes sit for 60, 70, 80 days with 0 offers. Charlotte just hit 3,452 active listings. Raleigh sitting at 1,950. Those numbers sound normal until you realize we haven't seen inventory levels like this since 2015. The supply crunch everyone said was permanent, it's unwinding faster than anyone predicted. But here's the part nobody's talking about. This inventory explosion isn't hitting buyers the same way. There's a hidden pattern in the data that's creating winners and losers, and most people have no idea which side they're on. So what's actually happening? Let's start with the number that matters. North Carolina now has 5.7 months of housing supply. 6 months is the magic number where economists say a market is balanced, neither favoring buyers nor sellers. We're 1 month away from that line. A year ago, we were at 3.2 months. That's a 78% increase in available homes hitting the market in 12 months. Walk into any real estate office in Charlotte or Raleigh right now, and you'll hear the same story. Agents are panicking because the playbook that worked since 2020 just stopped working. List high, get multiple offers in 48 hours, close above asking. That formula is dead. Now it's list at market, drop the price after 2 weeks, negotiate inspection repairs you would have laughed at last year, and pray the buyer doesn't back out when they see 3 other houses pop up in the same neighborhood at lower prices. Here's the data point that tells you everything. The average home in North Carolina is now sitting on the market for 47 days. In 2022, that number was 22 days. Homes are taking more than twice as long to sell. But dig deeper and the story gets weirder. In Asheville, homes are averaging 62 days on market. In Fayetteville, it's 38 days. In the Research Triangle, it's 51 days. The state isn't moving as one unit anymore. Different regions are experiencing completely different realities. Let me tell you about Sarah, a software engineer I talked to last week who's been looking in Durham for 8 months. She got outbid on 4 houses in a row between January and March. Every single one went for 15 to 20 grand over asking, waived inspections, escalation clauses, the whole circus. She was ready to give up. Then something shifted in May. Houses started sitting. The urgency disappeared. Last week, she put in an offer on a house listed at $485,000. Her offer? $465,000 with a full inspection and $8,000 in closing cost assistance. The seller took it. 6 months ago, that offer would have laughed out of the room. That's the first major insight. The power dynamic has flipped, but only if you know how to recognize it. Buyers who are still acting like it's 2022, coming in with aggressive offers and waiving contingencies, are leaving money on the table. The sellers who haven't adjusted their expectations are the ones bleeding days on market and eventually capitulating with price cuts that wipe out any gains they thought they had. But here's where it gets complicated. This inventory surge isn't creating the same opportunity everywhere. In Charlotte, the luxury market above $800,000 is drowning in supply. There are 847 homes listed above that price point right now. A year ago, there were 312. That's a 171% increase. Meanwhile, homes under $300,000, there are only 213 active listings in the entire Charlotte metro. That's up from 178 last year, a 20% increase versus 171%. You see the problem. If you're shopping in the entry-level market, you're still fighting. If you're shopping in the move-up or luxury market, you're in the driver's seat. This creates a trap for first-time buyers who think the inventory explosion means they finally have options. You don't. You have slightly more options than last year, which means instead of losing to 7 other bidders, you're losing to 3. It's better, but it's not fixed. The real opportunity is for people with equity who can move up. Sellers in the $350,000 to $500,000 range are desperate because their buyers dried up. The people who would have bought those homes are still renting or stuck in starter homes. But if you can sell your $280,000 house and move into that $450,000 house, you're negotiating from strength for the first time in years. Now let's talk about why this happens so fast. There are three forces colliding at once. First, mortgage rates. We hit 7.8% in October 2023. That was the ceiling. Buyers walked away. They just stopped looking. When rates dropped back to the low sevens and then into the high sixes earlier this year, people thought the floodgates would open again. They didn't. Why? Because the monthly payment on a $400,000 house at 6.8% is $2,590. At 3.2%, which is what people were getting in 2021, that same house cost $1,730. That's an $860 difference every single month. People ran the numbers and realized they still can't afford it. Second force is migration patterns shifting. North Carolina was the third most popular moving destination in the country for 2 years straight. People fleeing California, New York, Illinois, they all came here. That demand propped up prices even when rates were climbing, but something broke in late 2023. The migration slowed, not because North Carolina got less attractive, but because the math stopped working. A couple selling their home in San Jose for $1.2 million could come to Raleigh and buy a comparable house for $600,000 and pocket the difference. That arbitrage opportunity is gone. Now that same house in Raleigh is $750,000, and with rates where they are, the monthly payment is higher than what they were paying in California on their old mortgage. The incentive to move evaporated.
The third force is builders. They kept building through the rate hikes. New construction permits in North Carolina were up 14% year over year through the first half of 2024. Builders thought they could outlast the demand dip. They were wrong. Now there are entire subdivisions in Cary, Apex, and South Charlotte with spec homes sitting empty. These builders have debt service to cover. They can't sit on inventory. So they're cutting prices, offering rate buydowns, throwing in $40,000 worth of upgrades for free. That's bleeding into the resale market. Why would I buy your used house when I can get a brand new one down the street for the same price with a 5.5% mortgage rate and granite countertops included? Here's a number that should scare you if you're a seller. New listings hitting the market are up 18% year over year. That means more sellers are deciding now is the time to list. Why? Because they're watching inventory climb and they're afraid if they wait another 6 months, they'll be competing with even more homes. It's a self-fulfilling cycle. Fear of losing equity is pushing more inventory onto the market, which pushes prices down, which creates more fear. This is how corrections start. Not with a crash, with a slow bleed of confidence. Remember that thing I mentioned earlier about winners and losers? Here's where it gets wild. The people winning right now are the ones who don't need to move. If you bought your house in 2019 or earlier, you're sitting on a 3% mortgage and a ton of equity. You're not selling unless life forces you to. That means the houses hitting the market right now are disproportionately from people who bought in 2021 or 2022 at the peak with high rates. They're over-leveraged, they're struggling with payments, or they're relocating for work and can't afford to carry 2 mortgages. These are desperate sellers. And desperate sellers create opportunities for patient buyers. But here's the darker side of that equation. If you bought in North Carolina in the last 2 years, you might be underwater soon. Home prices in the state are up 3.4% year over year right now, but that's a lagging indicator. The active inventory surge happened in the last 6 months. Prices haven't caught up yet. When you have 25% more supply hitting the market and demand is flat or falling, prices follow. It's not if, it's when. If you bought a $400,000 house in 2022 with 5% down, you put in $20,000. If prices drop 8%, which is entirely possible given current inventory trends, your house is now worth $368,000. You owe $380,000. You just lost your down payment and you're $12,000 underwater. You can't sell without writing a check. You're trapped. That's the thing nobody wants to say out loud. This inventory explosion is good news for buyers who have been waiting, but it's potentially devastating for recent buyers who thought they were getting in before prices went even higher. Some of them are going to get caught, and when they try to sell and realize they can't, they'll either walk away from the mortgage or try to rent the house out to cover payments. Either way, it adds more stress to the market. Now, let's talk about what this means for different types of buyers, because the strategy changes depending on where you're coming from. If you're renting right now and you've been saving for a down payment, this is the best environment you've had in 4 years. Not because prices are crashing, they're not, but because you have negotiating power for the first time. Sellers are covering closing costs, they're doing repairs, they're offering credits, they're leaving appliances. That's worth $10,000 to $15,000 in real money. Add that to the fact that you can offer below asking and still get accepted, and you're effectively getting a 5 to 8% discount on a house compared to what you would have paid 2 years ago. But you have to be strategic. Don't chase the cheap listings. If a house is priced significantly below comps, there's a reason. Foundation issues, bad layout, backing up to a highway, nightmare HOA. There's always a reason. The real opportunity is in homes that have been sitting for 40 plus days and have had one price drop already. Those sellers are nervous. They're wondering if they should drop again. Come in with a reasonable offer, prove you're pre-approved and serious, and you'll get traction. The days of lowball offers getting ignored are over. Now, if you're a move-up buyer, meaning you already own a home and you're trying to trade up, this is your moment. But you have to sequence it right. Do not list your house first. I know that's what everyone says to do. I know you don't want to risk carrying 2 mortgages, but in this market, if you list first, you're showing weakness. You'll take whatever offer comes in because you need the cash to buy the next house. Instead, get pre-approved for the new mortgage while you still own your current house. Make your offer on the new place contingent on selling your existing home within 45 days, then list your house after your offer is accepted. You'll have more confidence, you'll negotiate better, and you won't feel desperate. In a balanced market, this works. Now, if you're an investor, the calculus just changed dramatically. For the last 3 years, investors were getting killed in North Carolina because they couldn't compete with owner-occupants who were waiving inspections and paying cash. The returns didn't make sense. But now, I'm seeing duplexes in Greensboro sitting on the market for 60-plus days. Single-family homes in working-class neighborhoods of Winston-Salem with price cuts stacking up. Sellers who were hoping for retail prices are starting to accept investor offers just to get out. The cap rates are starting to make sense again. If you can find a property that cash flows at today's rates, and you believe rates will come down in the next 2 years, you're building in future appreciation on top of the cash flow. That's the play.
Here's my take, and I know this is going to make some people mad. The North Carolina housing market is not collapsing, it's correcting, and that correction is healthy. We had 3 years of artificial scarcity driven by low rates and panic buying. That created a market where teachers couldn't afford to live in the cities where they taught, where nurses were commuting 90 minutes each way because they got priced out of Raleigh. That's not sustainable. This inventory surge is the market healing itself. It's painful for people who bought at the peak. It's painful for sellers who thought their home was worth $50,000 more than it actually is. But it's good for the long-term health of the state. The people who are mad about this are the ones who wanted to flip their way to wealth or who saw their house as a retirement account. Tough. Housing is shelter first, investment second. If you bought a house to live in and you can afford the payment, none of this matters to you. Your house will be worth more in 10 years than it is today. If you bought a house as a speculative bet, you're learning an expensive lesson about risk. But here's where I'll probably lose some of you. I don't think this inventory surge is the bottom. I think we're in the middle of the correction, not the end. Here's why. Consumer confidence is falling. Job growth in North Carolina is slowing. The tech sector, which was a huge driver of migration to the Research Triangle, is shedding jobs. Credit card delinquencies are climbing. Personal savings rates are at decade lows. All of those are leading indicators for housing demand. When people are worried about their jobs and their savings are gone, they don't buy houses. They rent. They move in with family. They wait. And here's the thing that's going to push more inventory onto the market in the next 6 months: property taxes. North Carolina property tax bills are going out right now based on 2023 assessments. Those assessments were done at the peak of the market. People are opening their tax bills and seeing 20%, 30%, even 40% increases in some counties. If you're already stretching to make your mortgage payment and now your monthly escrow is going up $200 because of taxes, something has to give. Some people will sell, some will stop paying and go into foreclosure. Either way, it adds to inventory. So what does this mean for you if you're trying to make a decision right now?
If you're buying, don't rush. This market is shifting in your favor every week. The inventory surge means you have more options and sellers are getting more flexible. Wait for the right house, negotiate hard, and don't fall in love with the property before you've done your due diligence. If you're selling, price aggressively from day one. The biggest mistake sellers are making right now is listing at the price they wish their house was worth. Look at the data. If homes in your neighborhood are sitting for 50+ days, you're not special. Price it right, get it under contract in the first 2 weeks, and move on. Every week you wait, 3 more houses hit the market and your competition gets worse. If you're on the fence about whether to move, run the numbers without emotion. What's your current mortgage rate? If it's under 4.5%, you need a really compelling reason to move because you're giving up that rate. What's your equity position? If you're sitting on less than 20% equity and you bought in the last 2 years, you might not have enough cushion to absorb closing costs and a potential price drop. Be honest about whether this is the right time or if you're better off waiting another year. Here's what most people miss. The housing market isn't one market. It's thousands of micro markets all operating on different timelines. What's happening in Asheville has nothing to do with what's happening in Wilmington. What's true for condos in Charlotte doesn't apply to single-family homes in Hickory. The inventory surge is real, but it's not uniform. Some neighborhoods are seeing 50% more listings, others are seeing 10%. Your job is to understand your specific market, your specific price point, and your specific situation. Don't make decisions based on state-level data. Zoom in. And here's where most real estate content stops. But I'm going to keep going because this is where it gets interesting. The inventory explosion in North Carolina is a symptom of a much bigger trend that's happening across the Sun Belt. Texas, Florida, Arizona, Tennessee, Georgia, they're all experiencing the same thing. Inventory is surging. Prices are stalling or falling. Buyers have more power than they've had in years. Why? Because the migration wave that drove growth from 2020 to 2023 is over. People aren't fleeing high-tax blue states at the same rate anymore. Remote work is declining as companies call people back to the office. The arbitrage opportunity is gone. What that means is the states that benefited most from the migration boom are now dealing with the hangover. North Carolina added over 1.3 million people between 2010 and 2023. That growth drove demand for housing, schools, infrastructure, everything. But growth is slowing. And when growth slows, all the assumptions that drove investment and development get called into question. Builders who thought they could sell 50 homes a year in a new subdivision are selling 20. Investors who thought they could rent out single-family homes for $2,500 a month are getting $20,000. The margins are shrinking, and the weakest players are going to get washed out. That's not doom and gloom. That's reality. Markets go up and markets go down. The people who win are the ones who adapt to the conditions in front of them instead of wishing for the conditions they want. Right now, North Carolina is in a buyer's market for the first time in half a decade. If you're a buyer, stop waiting for perfection and start negotiating. If you're a seller, stop waiting for some mythical buyer who's going to pay your 2022 fantasy price. They're not coming. And that's not even the crazy part. Wait until you see what's happening in Texas. The inventory surge there makes North Carolina look tame. Austin home prices are down 6% year over year. San Antonio has the slowest market in the entire country. Dallas is seeing builders offer 5% rate buydowns just to move spec homes. The same story is playing out in Houston, in Fort Worth, in every major metro. Texas added more people than any other state over the last decade, and now the chickens are coming to roost. Overbuilding, slowing migration, rising costs, it's the same formula. We're going to cover that in the next video because the data is wild. So here's my question for you. Knowing what you know now about the North Carolina inventory surge, would you still move here in 2025? Or would you wait another year to see how this correction plays out? And if you already live here, are you holding or selling? Drop a comment and let me know because I'm genuinely curious how people are thinking about this. Am I wrong about where this market is headed? Tell me why.